Welcome to the January 27th, 2020 Advance Report from McGowanGroup clients and NetWorthRadio.com listeners. I'm Spencer McGowan, President McGowanGroup, and your financial weatherman with your fast-paced tour of the global financial markets this week. We're going to start with the Dow year to date. There's a saying, as January goes, so goes the rest of the year. Well, that's not always true, but we do have a good start to the year, 2.5% gain on the Dow. By close of Friday, it was about 2%. Well, that rally continues. This interruption was the headlines on the tragic epidemic coming out of China. It tends to get overbuilt in. Oil retracted by about $3 per barrel on that news. And then the financial markets stabilized by the end of the week. What's competitive and potentially more conservative than being pure equity? And I'm going to give you some warnings on equity in this report. This asset class is one of the global high yield leaders. It's up 3.5% compared to the Dow 2.5% in price so far this year. So the global high yield rally that we referenced at the end of 2018 after that quick bear market cycle led to great performance in 2019 for global high yield, and that still continues. Not without price risk, but going forward, yields available at around 7%, still at nice discounts, and that rally continued for global high yield. S&P 500, I want to start with an equity warning here. When I look at this chart, this is the earnings recession we had last year, and part of the decline in 2018, if you notice, earnings were up in the second half there, but when we got into the earnings recession here, you can see earnings for the S&P 500 dipping. Now we have projections that they will go up 20% in the next 18 to 24 months. Is that coming true? And here's the warning shot. As the indexes grow to arguably historically high valuations relative to earnings for about a fourth of the S&P companies, 86 out of 500 companies reporting, earnings only grew at 0.8% year over year, not really fulfilling that rosy forecast by the analysts. In fact, we found some trouble spots there. On the high side, energy was good, consumer discretionary good, consumer strong, consumer staples as well, and healthcare strong. Financials also led the charge. Communication services doing great, and information technology, remember 1999. There's a lesson in there, and I think it's time to prepare our asset allocations for potentially what happened in 99 for those of you that remember the tech wreck. All right, here we have the biggest gains in earnings for the S&P 500. And so as we look at Lennar, Apache, there's an energy company there, Salesforce, Pulte, another home builder, D.R. Horton here in Dallas also had good year-to-date gains, Citrix Systems. And so you can see a batch of technologies, home builders, in the top gainers for the S&P, Advanced Micro Devices as well. But TI had a minus 10% in revenue in this week's report, and they were hitting an all-time high at the same time. Revenue down, earnings down, but price all-time high. That's the diagnosis for technology, and it's a warning signal for the indexes. What could be a solution? Well, as we go forward, I went back to 1999. The white graph is the NASDAQ, and if you remember the tech wreck. The yellow graph is energy. And in 98, we had a bear market cycle in oil, just like we had here. The yellow is the S&P energy companies. The white is basically the technology companies. And we can see the high point on the NASDAQ at 5,000, the low point, 1,100. Energy had about a 20% decline as the tech wreck unfolded and that recession in 2002. But if we look at the starting point here, what really happened? It was a decline in the NASDAQ of over 50% in value, while at the same 5-year time period, we have a gain on the S&P Energy Complex of about twofold. Things always unfold differently, never without price risk and equity, but this tells us on an asset allocation strategy, the energy sector, and specifically energy infrastructure, can provide great dividends and a great valuation relative to what could be overvalued indexes because of overvalued technology. For those of you that would like to update your plan, come down to the McGowan Group at the Crescent for a tour of our new galactic headquarters at 1776. Well, go to NetWorthRadio.com, fill out the preliminary client questionnaire, and be sure to tell your friends that ask you for financial advice. Say, well, go here, and that way you're not on the hook for giving financial advice. You can just say, do YouTube McGowan Group. Thank you for tuning in to our YouTube channel. I'm Spencer McGowan, President, McGowan Group, your financial weatherman. We sponsor each week NetWorthRadio.com broadcast. That has the charts and graphs, many of which you saw today. We also sponsor this YouTube channel. Be sure to subscribe for fast-breaking news, an alert when we post something in a market condition that may have changed. Our goal is to help you as an investor make the right decisions at the right time. And that's part of what this YouTube channel is about, as well as NetWorthRadio.com. I am well served with a team of 10 people, including myself. And that team that cares is actually made up of people who devoted to your net profits and your success, as well as excellence in service. If you want an educational experience to follow this up, get to NetWorthRadio.com, the McGowanGroup.com. Right here, we disclose our net client experience all the way back to 2001. What that includes, the bear market cycles of 02, 08, 2018, and the recoveries through the most recent quarter. That is true education of investors and exactly how our clients have done, disclosed right here. Further disclosures, value at risk of loss. Yes, investments are going to fluctuate. That's part of the reason for this broadcast. And that can actually work to your advantage. We'll build that into your plan. So I urge you to go to NetWorthRadio.com, fill out the preliminary client questionnaire, a free 1-hour brainstorming session by phone or at the Crescent in Dallas, and we will map out a multi-year plan for you and your family that's appropriate. Just because we talk about a security on this broadcast or any securities doesn't make it a recommendation for your portfolio until you have that written plan. Thank you for tuning in today, and we'll be back next week as your financial weatherman.